Good afternoon, Scott Redler, T3Live. Welcome to today's midday recap. I believe it is, I don't have my watch on right now, but like 12:30. I have to take care of a few errands. I'm going to be on street signs at around 2:40, and I'm not going to be coming back. So I just want to do a quick little go through of where the markets are now and what I think is taking place or what I'm seeing. I know as far as the week, it was definitely a very tricky week. Everything looked really, really bullish coming into Wednesday, and then Italian bonds soared over 7%, and we had that brutal down day. A day that a lot of people had to get out of longs because we are somewhat short-term traders. We're not big portfolio managers with hundreds of millions of dollars. So you had the opportunity to actually get out of some of your momentum positions or get out of what you wanted to hold on to if we were in such a strong uptrend without that type of volatility. And then afterwards, yesterday, today, we've had two strong days that pretty much wiped out the entire importance of Wednesday. If you're upset that you're not in the same positions you had on Wednesday or how you acted or performed, don't be. Okay, on Tuesday when we closed really strong and everything looked like they were ready to go, that was a great setup, and there was nothing you could do about when Wednesday hit. And when Wednesday hit, the prudent thing to do was to sell most of your longs, regroup, get back intact. Unless, again, you're a macro position holder, which there are a lot of subscribers that are, and you were holding through this entire 8 to 12 month process, and then you're just staying the course and you're just trading around those positions, because there are still a lot of really good looking stocks that are poised to make new highs this year, but sometimes how they get there are a little tricky for someone who's a bit more uncommitted and watch things as closely as we do. So with that said, the last few days I've seen some rotation. I've seen some sectors get stronger as the market rallied or bounced back, and I've seen already some groups engulf and are above where we were on Wednesday, and some are still just in stride. So if you notice those little differences, it can give you clues on where the relative strength is and where to focus your energy, because some of the stocks that we've been consistently trading aren't acting the exact same way, and things change, sectors rotate, and we have to rotate alongside with them. So as far as the S&P, if you take a quick look here, if you remember last Friday was, I think on this day, and I talked about as long as this 12, 20, actually what was this, 12.15, 12.20 stays intact and holds, that the bullish momentum will stay fit. And then even saying, if this broke, you still could be intact for more upside action if the 50-day holds, which is now at 1200. So all in all, if you take a look, even after Wednesday's huge down day, it never violated or even attempted to go under this low from last week. So short term, it looked ugly, but on a macro sense, really not that ugly. This uptrend still intact, and now the S&P is coming right back to this area that it's going to look to break through once again. It might not, hopefully it doesn't happen Monday, Tuesday, gives a little bit more time, but overall, taking a step back, and this pattern looks pretty much the same, except for the fact that it's taking a little bit longer to go sideways up here before making another move, and rightly so. You had a big 15 to 70% move from below 1100 to this peak here, 1292, so why not take some time? Remember when we said that the speed would change? It was really a lot of pent-up energy because the 25% retracement was holding the entire way, and then finally after those two distribution days, we went to the 38.2%. So all that meant is that longs didn't feel as rushed to get in, and shorts had a little bit of a way out, and that means more time before you make extreme forward progress. People were thinking we'd be at 1300 last week, and just wasn't the case yet. So anyway, I'd like to see things remain a little bit slower so we could see better setups and better pivots, and I'm starting to see a lot of them. And I'm also starting to see some groups step ahead of others. Retail still, in my opinion, is one of the leading groups. If you take a look here on retail, the RTHs, you'll see that, look at this. We're almost right back to these highs, almost ready to break through the highs of this recent move, the highs of even last summer or this summer. So here was that Wednesday. Yesterday was strong, and now we've already engulfed that 2-day range, showing absolutely no power within that move, saying this means nothing. And now this group looks ready to go. If you want to let's look at some stocks in this group. Under Armour looks really good. Okay, I think you could be in a tier 1 here, and then traders will probably be trading this above 85 next week for momentum for a breakout. Let's take a look at Deckers. not as good, but almost above yesterday's high. So this is lagging a little bit, still above this uptrend. And then it's going to need some time before a breakout, but this still looks okay. Let's take a look at Macy's. Macy's, well, we'll take a run through and we'll see what looks good. And Macy's still looks okay. Not great looking pattern, but still wedging, still in the game for higher prices. I think JCPenney is a stock that I looked at before. This actually has a nice clean pattern. Some things develop a little bit differently. In this JCPenney's, it looks like through 34, you're going to see a nice move here, holding higher above all the moving averages. JCPenney's looks pretty good. Lulu, I think, is still digesting what's been a pretty big move. It didn't really respond great, I would say, the last 2 days. So, no even really place to draw this line. So, I guess you could say if you're long, perhaps be long versus this. What is this, about 53? It shouldn't really go below 53 if it's going to stay strong. What you do have is a pretty defined downtrend. So momentum won't come into this until it starts breaking above this 58. So it's just a little bit quiet right now on the radar, but not looking like it's ready to go. And then let's take a look in the OHs and the XLE. Yesterday I started looking at Hess and XOM again, and even people talking about Chevron, and then some of the refiners. And the OAHs had a strong move. Look at the OHs here. Oil's been strong. This group is looking like it's ready to go through this downtrend again. I know we got suckered right around here when it looked like it was going to go. I guess it needed more time. What did it do? It just held higher once again, and now looks as if it wants to get going above this area. Some stocks in this group. I know Schlumberger got us good, but all of a sudden, doesn't really matter, does it? As far as macro, what did it really do? Not much. It didn't even break this, what is this, like the 21-day moving average, or even reached a 50. Held, remember, I think we talked about compartmentalizing this range from, here's the high end, here's the low end. It still held the upper end, and now it looks like it's ready to go. This looks good. Schlumberger looks like it's ready to break out. Let's see what Halliburton's doing. Halliburton looks good too. Halliburton, tight chart, nice wedge, holding higher, never broke below these moving averages. Not really frisky as far as wide range bars, but that looks pretty good. Hess today, nice leadership, trying to break above this recent range, not really having any power yet, but it's still early in the day, but this looks good. XOM, let's take a look at that. Trying to break above, still looks good. You had that, remember we talked about the ascending channel, broke, retested the first time we actually talked about it, and now looks ready again. So this group looks good. XLI, the industrials, hanging in there, hanging tough. I don't know if I went over this or if I drew this morning, but anyway, this looks pretty good. Let's see what GE looks like. It's just, nothing. But I guess you could say, again, it's a little bit tight here. If the market stays in this type of buy mode, you could buy it again at 1650. I know we had a really good trade over here, but then it came in just like everything else. IBM, looky. Stephanie would be proud. No pullback in IBM, broke this uptrend, thought it would mean something, didn't, I guess. It held here, and now it's back above this 2-day range and looking like it's going to knock on the door for a momentum trade either later this afternoon or hopefully Monday, because I'm not ready for it. I'm going to be out of here, but IBM looks really good. Above this 188, it could make new highs. SanDisk, people were talking about it today, looks good also. Remember we talked about SanDisk being a really good buy way back here, when it crossed a downtrend, and since then it's been a very, very strong stock. And now it's trying to set up, absorb what has been a really big move, holding support, and it looks like it's going to be ready to make another move, perhaps to 57 to 60. So there's a lot of things going on here. Even Cisco had some follow through today, believe it or not, after the earnings. Let's take a look at Microsoft. What's that doing? Microsoft, it's been holding. Doesn't look great, but I think there is a bit of a thesis out there that investors want mega cap stocks, names with low PEs, nice cash flow, with a dividend, and this could get some momentum if it starts getting above 27. I think Goldman Sachs downgraded the other day, didn't really go down, so maybe they wanted to buy more. This looks like it's in the game for higher prices. Intel, I know, has been acting well for months, and look at this. This will probably be one of the first mega caps to make new highs in the year, so people are finding some value and actually some spunk in Intel. Let's look at the SMHs overall, the semis. Looks good as an indice. Looks similar like to the rest, but also above these 2 days, knocking on the door of resistance once again. Nice little channel here after a really big move, consolidating in a descending nature. So descending channels typically go to the upside. So as I look at all these chart patterns, again, I'm seeing tight patterns that have been absorbing a big move that started in October. We've had some brushback pitches along the way that are hard to deal with because obviously the world right now is still a dangerous place. Europe definitely they haven't solved their problems yet, but in the last day or so, there hasn't been any calamity. I think Italy passed their austerity measures, and now we'll see what happens in the next few weeks on implementation. None of these things have even been implemented yet. They've all been just talk, and it's been so crazy with talk. So I guess if the can's kicked long enough down the road, the market could do whatever it wants between now and the next event. And it seems as if when everything is quiet, the market wants to go up because historically, we're November into December. That's when the market tries to float up. That's when stocks try and get big percentages so they could show returns, so portfolio managers can get paid. So people will spend money during Christmas time because they'll see their 401k higher. So whoever is behind the curtain pulling the reins, typically this is a historically strong time. So it could continue. We could get another headline like we had last week. Out of Italy, but out of somewhere else, or maybe Italy again, and we'll deal with it. So that's why know your risk tolerance, know your commitment level, know your time horizon, because those are the most important things. There are people that didn't sell a share on Wednesday because they've sat through this for the last 6 months every time that it happened. There are guys that are managing their portfolios that didn't even sell when we broke below 1,100 and got back involved. So, there are different ways to deal with the action. There are also people that have been holding IBM for 5 years, let alone trying to play a week or two trend. But you need to know where you are within that spectrum. You can't think you're a long-term holder and then be shaking in your boots on Wednesday and not sleeping at night, because then that's not you. Then you need to have less risk on. If you're a day trader and you don't want to have anything overnight, you need to know that too. So figure out what world you're trading in. As far as Apple, I think the reason why I'm not as upset about Wednesday is because we caught a really nice trade in Apple. So even though we didn't go back long Thursday, Friday, we made a lot of money yesterday shorting this Apple as it broke this box type pattern. All right, there was a lot of good trades in Apple. This obviously was a day that the world looked like a different place, and then we closed in the dead lows. And then yesterday's gap up was almost a gift because it closed on the 50-day, on the bottom of the range, 2 action areas, and then went from positive to negative, broke below it. That was your trade. And then it closed on the 100-day or around there. Then today we gapped up, and then that was another good short to open, because what do? Stock closes really weak on some, put some volume in here, and you'll see that there was volume yesterday. So typically you look at it again. So here's your volume yesterday. So it opened up, you shorted it. You could have shorted more through yesterday's low of 382.15, and then it put its low in at 380.26. So when it made that new low, that's when I covered it. I said, okay, that was a nice 2-day trade from 398 down to almost 380. That's 18 points, and plus it was as high as 408 the day before. So you're talking really about a 30-point move. So why not take some off? And then I think even Sperling just made money long, because what did this do right here on a short-term basis? It just did a little bit of a red dog reversal, right? Traded through the prior day low. So people got out that were trading a long versus that low. Maybe they even stopped people out as it traded through the moving average. Anyone chasing, saying, you know what, it's going to go to the 200-day today, not knowing where it just came from, might have got caught a little short, when we were actually covering, and now you had a nice little up move. So we'll see what happens when it tries to retest this broken box pattern, which stands at around, really, this low here is 390. This low here is 394. So really 390 to 394 is an area to be watched, where it'll be important to see the future direction of Apple. Does it come up here, and can you reshort that for then a move lower, or does it reclaim it? But for right now, the meat and potatoes of this short, in my opinion, is over. That's why I covered it, and I sent the note exactly when I did to try and keep everyone in the trade. And now you could get maybe a cute scalp back. And if you're an investor in Apple and you've been through this before, and you think this is just a blip in the story of Apple, you could be right. So if you're there and you're holding, okay, you probably have been doing it for a long time and you're up a lot of money. But again, you never want to be caught in a situation where everything changes. You don't want to be caught in, when the music ran out on Dell, or when the music was over with Microsoft, or the music was over in RIM, or Taser fell apart, or Netflix broke its uptrend and got crushed, or GMCR was good until it wasn't. There are times when the baton gets handed off. And I don't think that's the question yet for Apple. Apple trades at a PE less than 15, and next year they're supposed to grow at a 35% clip. What I do think is wrong is that it's too expensive for institutions to add, for people to feel comfortable, for traders to have big positions on swing accounts. So what they need to really do is split their stock in order to get out of harm's way, because it's too over-owned in this area. And but with that said, even if they don't split the stock, next quarter is going to be a really important quarter. How did the iPhone sales do? How do iPad shipments go? I think the whole, what's it called? Geez, what was I going to say? iPhone, iPad, and all right. Anyway, I just had a Perry moment. So it'll be like the proof is in the pudding, and the real level that institutions need to stay with this stock and defend it is the 200-day, and we're not even there yet. So on a macro level, if you're long Apple, you've been there for a while. For a trader, it was a great technical short, a nice 2-day trade to make 20 points, and even today you had a little bit of a bounce, and then we'll figure out what the next trade is next week. If it tries to bounce back, kind of reclaim the 50-day, or does it get rejected at the 50-day? And then besides all that, there's a ton of other things to trade. So all in all, market's a very exciting place right now, where there's something for everyone, from the long side, the short side, from the micro investor, the macro investor. All you have to do is pay attention and look for it. Don't crawl under a rock. Don't just read the headlines and get a stubborn bias, because that's been hurting a lot of people. After Wednesday's action, I know a few guys that have been shorting every tick since, saying, look at what happened Wednesday. Look at the size of that bar. We can't be going up. We can't. There's no way. And they're getting crushed again. They've been probably doing that for the last 8 weeks, instead of saying, okay, we had a day to take notice. Does that day control the future action? How do we know that? By whether or not the market could bounce back either a third or a half, and the bounce actually was almost 2/3 of what Wednesday was, so no longer is that bar controlling the direction. So that's how you measure the validity, by the size of the retracement, and the retracement in the last 2 days was pretty impressive for the bulls. So at this point, you can't be a stubborn short. If we bounce back yesterday and we turn back down today and we only got 100 of those 400 points back, that means no one was coming in to buy that dip and there was no commitment and things would be different. That's not the case. I know it's only probably closer to 1, and a lot could happen between now and the close. So don't do too much. Hopefully you didn't get too beat up this week and you salvage situations, because there was a lot of action out there. And then next week will be another week, and just make sure you're not too caught up and you don't revenge trade, and you have a free thinking mind after the weekend to start moving forward once again. This has been Scott Redler, the Midday Call. I will be on Street Signs at 2:40, so tune in, and then I'll see you Monday morning. Have a nice weekend.